hopefully you can see my screen. It should be the ES chart, but in the CPI we were here, and so we went from 3750 to now 4050. That's 8% on the S&P in like 3.5 days. If you go to the 200 day, which is probably where it gets, it'll give you another 0.5% on the S&P or on the ES mini, however you want to quantify it. But this is different because, if you take a look at where we were when the CPI happened, it was on the back of a 90% puke down day. So that's what this day was. And so, things were implicitly bearish versus now, we've run up so much. So it's not the same today, in my opinion, where it's like you try to chase something. When we chased here, we chased a breakout as well. So it's not necessarily the same. On the Nasdaq, we're pressed right up against the 100-day. This one shows it a little bit more clearly because this was a 90% puke down day on the 9th, and we were just like not even 1% from the lows, 1% from the lows. And so we go from that to where we're at today on the highs, it's 12%. So chasing it up 12% in 3 days is not what I want to do. Unlike the S&P, which is like 1% from its 200-day. Nasdaq's about 5% from its 200-day, which is in line with this downtrend that it's been in. So, if you don't chase it, which I don't want to do, and you get some consolidation and follow through, you could really run to that downtrend pretty quickly. So it's not something that I want to hurry up and try to figure out right from the jump. The PPI number was pretty good. It was an increase of 2.2% month over month, which the expectation was 0.5%. So it's less than half of what was expected. So it's basically telling you that the cost of goods for retailers and for others is softening. So then the question becomes, are they going to pass it on to the consumer, or is the CPI going to come in soft as well, because this one came in soft? So it's kind of like the main question that's going to be asked. The point of it is, how much of this are they going to pass on to the consumer is the main question. And then the other thing is, this is not really a number that the Fed kind of looks at. So they look at PCE more than anything, and the PPI is just kind of like a read versus where it could be moving forward. And so it's kind of like important to keep that in the back of our minds. And that gives you, but the main thing here is it gives you two data points that will come in softer, and it kind of goes in line with potential peak inflation narrative. That's kind of like what people are looking for. So that being said, again, our main thing is we want to pay attention to the 2-year, US 2-year, and we want to see if this starts to roll over, because remember, our goal is to see this start to roll over, another potential sell-off at some point without this coming back and making new highs, and that kind of gives us the floor. So currently you get the 50-day 426 on the 2-year, and as soon as that starts to roll over, really has an air pocket back to 3.7. 3.7 is still pretty hot, but it gives you kind of like a sense of how much of bear meat can get chewed up if and when that happens, right? So the other main thing that kind of came out was the Biden Xi China thing, and a lot of people are kind of like looking at Chinese names. So in the case of Alibaba, for example, you've got the 50-day at 77. Currently, it's trading at 79. If this 50-day were to hold, you kind of have a runway to the 100-day potentially. I think it's going to be messy. I think it's going to be a little ugly, but that's kind of like what I'd want to pay attention to. Does this 50-day hold? If it doesn't, then it's probably going to fill a gap, right? And then essentially, in my opinion, 73 probably holds as a floor, because that was this low back here. But then outside of that, if you pay attention to some other names, so PDD, for example, this is a better setup. This one's acted stronger. it's, been a little bit more clean, and it's given you, 1, 2, 3, 4, and this will be the fifth test of this 74, 75 level. And if that were to break out, then it's got a little bit of runway. This one, again, like I said, has been cleaner and clearer. And the main thing here is all of these moving averages are starting to roll up, not come down. So that's one. JD is another example. JD is going to open right at its 100 day. Again, this is a pretty violent move. There's no consolidation. It's pretty violent. It's going to be up, 65% in a matter of like a month, less than a month. So it's not something that I'd want to chase. So again, it's like a stock picker's market. One of these things you want to pay attention to. The thing I'm going to pay attention to off the open is going to be Tesla. And the main reason I'm going to pay attention to it is because, it's not been above its 50-day since Wednesday, November 2nd. That's when it broke down. But it's not really been above its 50-day since the 1st, right? Because that's where things started to roll back over. So it's going to open above its 50-day. It's going to open right at this resistance level that we were at in the last couple of weeks, or in the last couple of days, excuse me. And if it were to hold this 50-day, again, I posted it in the Every Time I Cash channel. But as long as it holds this 50-day or 50-hour, excuse me, it should set up for a potential mean reversion higher. 200 was let me show you. 200 was the resistance here on the spike up at 835. So 200 will be resistance on this one during the session. So I want to pay attention to the 200 level. If it gets through 200, look for 202 to be resistance. I think that's like the daily resistance. So it's the resistance low from the 20th, and then from there, look for 203 to 205, somewhere around there. But essentially, 207 had been the support level for months, and here you see it pretty clearly. So that's kind of like where I'd look to see that they put ticket to. So I'm gonna close it here because we're about to open. But hopefully this was helpful, and talk to you in the session.